Hi there, welcome to Kneppy Invest and welcome to January 30, 2025. There's about 52 minutes left of a trading day on a surprisingly update. Surprisingly green day because the lead-in from Wall Street was fairly weak. So we have bucked the trend. So maybe the Asia markets are doing well today and we're following those markets a little bit more closely than the Americans. Microsoft, Tesla, and Meta all released results. When I looked at the futures for those three companies after the results were released, pretty good, should be a pretty good day for Meta. 50-50 when it comes to Tesla and slightly negative for Microsoft. So it looks like that Meta did beat results. And I think Tesla just fell short. But then the futures did rise after the investor briefing. So who knows what's going to happen with that company. But we are in the peak of reporting season over there. And I think tonight we also have, or tomorrow morning, we have Apple, Visa, MasterCard releasing their results. So Apple results should be interesting. Anyway, what's happening on the Australian market today? The second last day of January, which means if companies need to release their Appendix 4C or 5B or quarterly report, they have to release it by the end of trading tomorrow. Some companies will release it on the first day of February. They have to release it before opening, and if they don't, their shares will be suspended. And a lot of quarters, you do see that happening. Most of the good Appendix 4Cs and 5Bs more than likely have already been released, because if a company doesn't have or hasn't had a good quarter, you do see a tendency for those companies to release it as late as possible. And it makes sense. If a company has a really good quarter, management want to get that news out as quick as possible. And we have already seen some really good Appendix 4Cs and 5As, including Pentanet, Pointera. What else? I actually written them all down. I might do a video on the top 20 Appendix 4Cs and 5Bs of the quarter. Yeah, Pointera, Pentanet. There's quite a few other companies in here that I can't think of, even though I've written them down. Anyway, so look out for that video, which I might release. I might do, depending. I don't know. I'm thinking about doing that. Anyway, what's the agenda for today's video? Okay, so we'll go through the ASX today. We'll have a look at the best and worst performing sectors, indices, also companies. Top 5 stocks of the day. Number 1, or the stock of the day, fairly easy, had to be Zip, just because of the share price movement on that company after they released their second quarter results. I've already recorded that video on Zip. Coming in number 2, had to be Credit Corp. The second, in fact, I'd say it's the first major company to release their results for the half year. We've already seen a few other companies release their results, including a company called Corvest, but that company is quite small. Credit Corp traditionally is the first big company to release the results, and the share price is down because they missed expectations. So I'll talk about that. Articore released a trading update. 2 companies doing a share buyback. I decided I want to talk about those 2 companies. And another company I've just included, Nanoveu, Nanoveu, because they have hired a new CEO of one of the divisions and the market likes it. A few other companies I could have included include Appendix, SciDev, Intelligent Monitoring, MetaVisor. All those companies released Appendix 4Cs today, and some of those companies are down fairly big. I decided not to include those companies in the top 5 stocks today because I might do a standalone video. I haven't decided just yet. Anyway, so let's get stuck into looking at the ASX today. Before we do that, what's happening with economics today? Fed pauses rate cut cycle. I don't think Trump likes that. He was sort of, I wouldn't say warning the Fed and Powell, but he said interest rates need to be cut. Well, if you have inflationary policies, the Fed won't want to cut interest rates. In fact, that's one of the things they've mentioned. We just want to see what happens with all these things that Trump has put into place because, again, they could be inflationary. Tariffs are inflationary, that sort of thing. Anyway, what else has been happening? Philippines, really good GDP growth, up to 5.2%. New Zealand business morale falls to 5-month low. I don't really care about 5-month lows or 5-month highs. Bank of Canada cuts rates, and Brazil raises rates by 100 basis points as expected. Okay, whatever. And dollar holds steady after Fed decision. That is surprising. I actually expected the dollar to rally. So maybe the market had already priced that in. Okay, so let's have a look at the ASX today. and a pretty good day. A really surprisingly good day. I expected to see reds, and it's been across the board. All sectors are up. Some sectors have performed much better than other sectors, including energy, discretionary, both up by more than 1%. And a few sectors have not performed as well. Real estate, industrials, IT, and telecommunications, all up by only, well, less than 0.2%. And gold, okay. Small caps, probably the weakness in the market today. Small caps down a little bit, not sure why. And yeah, nothing to really complain about today, unless you short the market and or you have heavily invested in small caps. So maybe that's the sort of the only investors that are disappointed today. And I do have quite a few small caps in my portfolio. I'm not sure if I'm disappointed because I have to have a check. Okay, before we get to the top gainers and top losers, there it is, biggest fallers. That's interesting. So it's called top gainers and biggest fallers down the page here, but elsewhere it's called top gainers and top losers. Maybe someone complained. Anyway, about the top losers, you can't call companies losers. Bad connotations with that word. But anyway, let's have a look at the top gainers on the ASX Today. A company close to getting in the top 5, a company called Alterity Therapeutics, up 137.5%. So let's talk about Alterity Therapeutics. This company is not a real company. It's a story stock, which is one of the reasons why I've not included in the top 5 stocks of the day. Impressive share price rise. But before today, share price was below 1 cent, so I don't really pay much attention to these type of companies. Now, in saying that, the share price has risen a fair bit over the past few months. It was as low as like 0.3, 0.4 cents. So if you got on board this company, then you have done fairly well. They released positive phase 2 results. I don't get that excited about positive phase 2. I get excited about positive phase 3 results. And that happened with, say, Neuron Pharmaceuticals. Positive phase 3 results back in, when was that, 2021? Was it late? I think it was December 2021. And we saw the share price really take off after that. Maybe this is the colors for Alterity Therapeutics, but the share price is fairly low. Either this company has a very small market cap or they have a lot of shares on issue. And actually you can see that just by looking at market index. Market cap of this company is $101 million, which means this company has a lot of shares on issue if they have a share price of 1.9. And all you have to do to know or find out how many shares on issue they do have is have a look at the key information. 5.32 billion shares on issue. That is getting a little bit too lofty for my liking, and that's why the share price is down a fair bit. And I might have to emphasize this again. I don't like share prices of companies below 1 cent because PIP trading. Even between 1 and 2 cents, I do get a little bit nervous. So at least share price of Alterity Therapeutics is now above 1 cent. So let's have a look chart for this company. Ticker code ATH. Now, I've already mentioned the share price has risen a fair bit over the past few months. So it wasn't long ago, early December, the share price was between 0.3 and 0.4. And we have seen a bit of an increase in volume. So there is maybe a few things to like about this particular chart, Alterity Therapeutics. But again, this is story stock. Maybe this is just the start of the story for the company, however. So interesting happenings with Alterity Therapeutics. Maybe not for me, but chart does look pretty good. Okay, let's go back to top gainers today. What else? Nanoveu, I will discuss that company, a new CEO for one of the divisions. Markets liked it. Nothing much else here. Hire Me, they did release results the other day. Appendix 4C. Seems like the market has liked it. I'm pretty sure it was yesterday, wasn't today? Yeah, it was yesterday. And, share price was down 19% yesterday on really low volume. This is just noise. It's just noise. If we have a look at the summary, yeah, look at the buy side. There's only 3 bids on the buy side. So share price could literally drop 20% tomorrow on one trade. Look at the sells. Yeah. So that's just a bit of noise, in my opinion, when it comes to Hire Me. Park did release the results yesterday. Share price did rally. Another rally today, but again on fairly low turnover. And Unith released results today. Fairly low turnover. So all these companies on fairly low turnover. I think I can move on. Yeah, I think I can move on. So let's have a look top gainers by market cap. Korean Energy doing share buyback, I believe, also released results. Looks like a positive reaction from the market. Let's have a look at the chart. Share price has been a downtrend for this company. Is this the end of the downtrend? Is this the first sign of sentiment starting to shift and the trend starting to change? Possibly. I'm saying possibly right now. I do like this chart. Not completely, but this could be a bit of a turnaround with the share price popping above $1.50. That was the important level for Karoon. Last time share price was this high was back in October. So we're only talking about a 3-month, 4-month high in the share price, which is not a long time. But this is sort of the best the chart has looked for quite a while. So that's Karoon Energy chart looking a little bit better. Developed Global, but they released something, I think it was yesterday or the day before. Intelligent Monitoring Group, up 6.4%. Not a fan of this company, particularly when it comes to the debt. And in fact, I'm going to show you why I'm not a fan of Intelligent Monitoring Systems or Group. So even though share price is up 6.4%, the chart I think might be a little bit negative. I had a look at this morning, and the one problem I do have about this company is their debt. And I'll just show you the problems of debt can have on this company. Really nice receipts. So this company has fairly low margins based off the receipts and lack of any sort of cash flow. So $50 million of receipts in 1 quarter, but they spent $27 million in product manufacturing and operating costs, almost $15 million in staff costs, $2.3 million in administration costs, and $2.7 million in interest and other costs of finance paid because they have debt. So that was or is their third biggest cost. In fact, if they didn't have debt, this company would have been operating cash flow positive by about $3.2 million, which makes these results a little bit different. In fact, if you have a look at the first 6 months of the year, almost $100 million in receipts and operating cash flow positive $1.3 million because they spent almost $5 million in interest and other costs of finance paid. So there's a lot of things happening with this company, a lot of moving parts for Intelligent Monitoring Group. And if you just have a look at investing activities, a lot going on here. Acquisitions of businesses. This company is quite acquisitive, and that's another problem I have with this company. Probably plant equipment, other non-current assets, intangible assets, 1.4 million there. They did a couple raising, which they need to do because they are burning through cash, making acquisitions, that sort of thing. And probably the most important thing for me is the debt. Here it is, $81.7 million of debt. So personally for me, I don't like companies like this having too much debt. And for me, that is too much debt. If you just want to ignore that debt, fine with me. But for me, I don't like companies having too much debt because it does put a brake on the company's growth just because of interest, that sort of thing. And I think they needed to get into debt just to acquire businesses, I think. I could be wrong. Let's have a look at the chart. This was a bit of a, maybe not a market darling, but it was up there. Share price was in a nice uptrend for a while, and that uptrend came to an end back in November. You can see the share price dropped quite quickly in November. It fell from about 80 cents all the way down to 40 or below 50 cents in about 4 or 5 trading days. It's been going sideways since then. I just don't like this chart. And if the share price does drop below this dashed line, which is a support level, that will be fairly negative. It is having problems falling below, but it's right on that level as I speak. Oh, no, it's just bounced off that level today. So this is not sort of the announcement or results that I'll be rushing into when it comes to Intelligent Monitoring Group. AccuSensus released results today, up 7.44%. Could discuss that company. I think the results were pretty good, but I'll leave that maybe to another day. And that's about it. So let's have a look at the top losers or the biggest fallers, depending on your point of view. And there's Zip, second worst performing company on the ASX today, down 24.47%. $2.50 is a really important level when it comes to this company. I am trading Zip right now, and if it remains below 250, I will sell my trading position because that is my sell price, and it's 243. So if we don't see any sort of bounce over the next few days, I will be selling my trading position in this company. It's very important to have a plan for every company you do own. Well, yeah, I think for every company you do own. I have a plan for all companies I own, either for the long term or just a trading position. Okay, so Zip. Vonex, this is interesting. There's sort of like a bidding war for Vonex. Don't know why it's down 22%. There's been a lot of announcements recently from this company in relation to these potential takeover bids. Okay. Oh, Max Hotel scheme arrangement terminated, but that was a few days ago. Not sure what's happening here. Soup takeover offer for Vonex is unconditional. So it's the other competitor. So maybe it's just lack of competition now. I don't know. Don't know. But the share price is down. One thing to like about holding companies that are undergoing a bidding war is the share price can go up. But here's a case where the share price has dropped. There it is. So you can see the share price going up, and that's because of the bidding war, and now it's just gone down. I would have taken profits a long time ago with in Vonex if I held it. Okay, so that's it for that. And as we go down this list, QPM Energy released their results. I won't talk about that. However, the share price is down 16%. I'm not sure why. I thought they were okay, and sometimes I can be wrong. And maybe I am wrong with this one. Let's have a look at the chart for QPM Energy. Share price was in an uptrend. And yeah, share price has dropped a fair bit today. Is this a buy the dip situation? I'm not sure because it has been fairly big volume. I probably want to know why the share price has dropped. Why is the market negative on their results? And nothing else here. Yeah, nothing else here of note that I can remember. So let's have a look at the top losers by market cap. We're going to have Zip at the top. Magellan Financial. What's happened there? I did see a little bit of mention in Capital Brief about it. Where was it? Magellan shares tumble after Gerald Stack departure. Don't remember seeing this in the announcements. This one is one I could have missed. And that's why it wasn't marked price sensitive. Update to executive investment teams. Do you think this was not price sensitive? Share price is down 7.82%, probably on this news. Should have been marked price sensitive. That's why I missed it. Not marked market sensitive. Anyway, so that's why the share price is down. Chart was looking pretty good for Magellan. Was looking pretty good. I still think it looks good. You can see the share price dropped a lot not that long ago. 6th December, share price dropped 8.62% and then stabilized and started to go higher. This could be a buy the dip situation for Magellan Group. Credit Corp released results, disappointed the market, lower than expectations, share price down 11.1%. Talk about that. Appen, Appendix 4C, 6.87% down. Interesting things with Appen, share price opened up. I don't know why. I thought the results were disappointing. I think definitely for a company with this sort of valuation, market cap is 500 or 600 million. Yeah, 638 million. They need to be doing a little bit better than they are. I think this is just run up on trading, day trading, that sort of thing. Definitely nothing substantial happening with the business just yet. I think they need proof. This is the 1 minute chart for Appen. Oh, yeah, here we go. Yeah, the share price definitely opened up. So it actually opened up about 3.5% on open. And this is just retail traders getting a bit too excited. And then the selling came in on force just after that. Share price has stabilized. Anyway, so that's Appen. What else? EZZ, MetaVisor, released Appendix 4C. Interesting. I expected this to be a good quarter, not a good quarter. They tend to have seasonality, and usually the December quarter is their best quarter. Not so true this year for MetaVisor. EZZ Life Sciences, share price keeps on dropping. Oversold without a doubt. I am thinking of buying some shares in EZZ Life Sciences just because it's significantly oversold. I just want to see the share price stabilize. Possibly starting to stabilize today, but I need to see the selling starting to come to an end. Maybe today is the day. We've had 4 big down days in a row for EZZ, and I had a look at the trading, and it looks like there are, on occasion, big dumps of shares on market. And usually when you see big dumps of shares on market, that could be a fund manager getting out. I don't know. It just seems to happen quite a bit for this company. And that could be why the share price has dropped 25% in the last 4 trading days. This company's starting to look fairly cheap. And also they have a fair bit of cash on hand as well. So the enterprise value might be $60 million for a company that is dividend paying, growing, and is profitable. So really interesting things with EZZ. This could be an example of the market really overreacting, or maybe fund manager getting out, sending the share price down. I don't know, but starting to look interesting. I had been trading EZZ. I took some profits when the share price got to, what's it, 360. In fact, let's have a look at the chart. I took some profits when the share price got up to, well, not the 1 minute chart. Let's have a look at the daily chart. Share price got up to about 460, yeah. And I thought I'll just hold on to the rest just to see what happens. I definitely will not sell that right now because the share price has fallen a lot. In fact, I'm more likely now to buy more shares because of how much or how far the share price has fallen. And the other thing is shares are oversold. I had a look. I thought they were oversold. I had a quick look just to confirm. And yeah, the shares are oversold. And last few times we've seen shares oversold, we did see a bounce. Okay, so that's EZZ Life Sciences. And SciDev released results. Pointera, a bit of profit taking maybe there. And Articore. Do want to speak about Articore? They did release a trading update. And before pay, not surprised the share price of that company is down upon the release of their Appendix 4C. So it sounds like a little bit more negative Appendix 4Cs and 5Bs being released, which is understandable because those more negative quarterly reports tend to be released towards the end of the month, not towards the start. Okay, let's turn our attention to the top 5 stocks of the day. Now, before that, what I've been doing is writing down all the Appendix 4Cs and 5Bs that I might want to discuss. I am planning to doing that top 25 quarterlies, my favorite 25 quarterlies of the month, and I'll probably draw from this list. So some of the companies that did release Appendix 4Cs today include Acusensus, Doc Anywhere, I think it's Doc Anywhere, Doctor Anywhere or something, Doctor Care Anywhere, operating cash flow positive, Change Financial, CCA, not operating cash flow positive, but moving in that direction. Capricorn Metals, cheating. I'm not sure why that company is still releasing Appendix 5Bs, but highly operating cash flow positive. Company called, what's it called? It hasn't secured RMY. RM Global, share price up 7.5%, operating cash flow positive, if I remember correctly. Quick Step, QHL, there is a takeover bid for that company. Really nice quarter. MPA, Mad Pause or something. Interesting quarter from this kind of share price down, which is a surprise because they were operating cash flow positive by a fair bit. And that's it. A few other companies here, but that's more because they were negative. Okay, so that's some of the Appendix 4Cs and 5Bs that were released today that look somewhat interesting. And I didn't mention Appen, but Appen will definitely not be in the top of my favorite Appendix 4Cs or 5Bs for the month. Okay, so let's turn our attention to the top 5 stocks of the day, starting with Nanoveu. Every single time I look at this company's name, I should be probably thinking of Nanosonics or Nano, the measuring distance, whatever it's called. But I always think of Mork and Mindy because was Nano, whatever. So Robin Williams, I always think of Robin Williams when I think of Nanoveu. I don't think of Nanoveu all that often, but anyway, share price up 27.59%. Possibly it should be higher on this list, but I do know some people are drawn to management. In fact, for some investors, that's the most important thing when they are researching the company. Well, who is the manager? And today, Nanoveu announced technology pioneer appointed CEO of semiconductor division. So not CEO of the company, but CEO of one of their divisions. Now, I am not an expert of the talent within this area, the semiconductor area. I've never heard of Mark Goranson. Globally respected industry leader with over 40 years of semiconductor commercialization experience, appointed CEO of Semiconductor Technologies. Yeah, so that's it. So it goes through his experience, and he's been involved with some pretty big companies, it seems like, including Intel. He held numerous roles at Intel over a period of 18 years, where he built state-of-the-art wafer fabrication and assembly test facilities across the globe, which allowed Intel to meet soaring global demand. These other companies I don't know much about. I definitely know about Intel. Anyway, Nanoveu, that's all I really know about Nanoveu. I probably looked at this company in the past, and nothing's really drawn me in. Nanoveu, specializing in advanced films and coatings, pioneering technology company specializing, they must own these must be divisions. Yeah, these must be divisions. So anyway, something to do with semiconductors, that sort of thing. The other thing I like to do when I see announcements like this is just go to the most recent Appendix 4C, if they release Appendix 4Cs. So we have to go all the way back to October, because I'm pretty sure they haven't released anything this quarter yet. I might have missed it, but I'm pretty sure they didn't. Yeah, they didn't. So what do we think? More than likely, it's going to be a little bit negative, but that's okay. And if you have a look at the most recent Appendix 4C, they had $104,000 of receipts. $104,000 of receipts. So not a real company just yet. Now, they are selling something or receiving receipts, but not a lot. So I would still classify Nanoveu as a story stock at this point in time. But they're more of a story than, say, companies without revenue. At least they're on page 100 instead of page 1 for a mining exploring company. So at least I have one thing going for it. Let's have a look at the chart for Nanoveu, just to see if the chart looks interesting. It might. It might. You can see a lot of volatility back in October, November. So I probably did mention this company once or twice. Share price has pulled back a fair bit. So just based off this chart, I don't really. I'm not drawn to Nanoveu just because of the chart. I'm not drawn to the announcement and not drawn to this chart. And because the company is more of a story stock, burning through cash, not profitable, you can and probably will see wild swings in the share price. So that's Nanoveu. Coming in at number 5. Maybe I should do more research on the company, but they have to prove that they can grow receipts for at least a few quarters, and they're yet to show that. The following next two companies, coming number 4, are two companies that are doing a buyback. Carnarvon Energy. Share price has not moved. The other one, the share price has moved, and that is Mach7 Technology. Share price up 8.82%. Now, with share buybacks, a company should do a share buyback if they have enough cash on hand, growing cash, so the cash flow positive, and probably the most important thing is if the company is undervalued. Now, there is a scenario where many management teams around the world think their company is undervalued. We have seen numerous times over the past few months where a company has decided to unlist or delist from the ASX because they believe the company is not appreciated by the market and they are undervalued. And if that is true, I think the best course a company can do is do a share buyback. But then some of these companies say, well, we don't have enough liquidity. Okay, so if a company is undervalued, they have enough cash on hand, share buy, and particularly if they are selling something and receiving cash flow, share buyback can be a good thing because the company is undervalued. And that's creating value for shareholders. So let's have a look at Carnarvon Energy. I don't think this company is producing any cash flow. And I was a little bit surprised by this. So we can have a look at their most recent Appendix 5B, which they released a few days ago. And I'm pretty sure they don't have any cash or have any cash receipts. No, they don't. And so I was a little bit surprised by this. But then I had a look at the cash on hand. They have a lot of cash. They have $187 million of cash on hand. So my next thought was, they might not have anything to spend that cash on hand. They just don't know what to do with it. I don't know. So then I had a look at the reasoning, and this is where it does get interesting. So let's have a look at the reasoning for this buyback. Here it is, share buyback. Here it is. So they do have a reasoning here. Here it is. We'll go down to the bottom where Carnarvon chair Rob Black just mentioned something here. The board has a firm focus on maximizing shareholder value, tick, exactly what they should be doing, in accordance with the terms specified in company. No, that's the wrong bit. So focusing on maximizing shareholder value and considers that Carnarvon's current share price does not accurately reflect the underlying value of the company's assets. That's 2 ticks. That's exactly what they should be doing if the company is undervalued. Now, I have no idea about Carnarvon at all, but if the company is undervalued based off their assets, this is the right thing to do. The buyback represents an opportunity to add value to remaining shares on issue. Absolutely right. So I have absolutely no problems with this decision. I would prefer the company to be making and selling stuff, but they have a lot of cash on hand. So I have no problems with this particular buyback. I do have some problems with some buybacks. Say if banks, say Commonwealth Bank was doing buyback right now, worst decision, worst capital allocation decision if they were doing it. I'm not sure they are, doubt they are, because that would be a horrendous decision. They would know, CBA management will know they are overvalued, and that would be a horrible decision. So this is Carnarvon Energy share price. Is it Carnarvon in WA, which I believe, but they're also Carnarvon Ranges in Queensland, which I should go to. Okay, so this is a chart for Carnarvon. And funny enough, the share price dropped a fair bit about a week ago, down to just above 11.5 cents. And for some reason, I've got this dashed line, which probably goes back. There it is. It goes back to the previous lows in 2023. So maybe you could argue it's good value here just based off this chart. In fact, if you take this chart all the way back to the COVID-19 lows, yeah. So we're talking about a major low, a major support level at this price. So just based off this chart, maybe management are right. The market cap of this company is 223 million. So with the cash on hand, and I doubt they have much debt, this company is an enterprise value of maybe $60 million, which maybe their assets are worth a lot. I don't know. Anyway, so that's Carnarvon. The other on-share buyback or market on-share, whatever you want to call it, is Mach7. Share price up 8.82%. I probably do have to agree with the market here. I thought this was a little bit better. And the reason is because Mach7 actually is selling stuff. Okay, so here's the reasoning why. They're doing an on-market share buyback. They also mention here, so maximum value of up to $5 million. The board considers the buyback to be an efficient use of capital. Now, in my opinion, the most important job of management is capital allocation, or how to use capital. So they're actually saying something here that means a lot to me. Efficient use of capital. One of the most important jobs, if not the most important jobs of a management. Anyway, the reason why they believe this is efficient use of capital is because of the strength of Mach7's balance sheet and strong cash inflows. So $25.3 million cash balance. So that is fairly important. Again, if they have a fair bit of cash on hand and if they have really good cash flows, share buyback, particularly if the company is undervalued, is one of the best things they can do. It is part of the company's ongoing capital management strategy and highlights the board's confidence in Mach7's future growth prospects. I'll be honest with you, that's what I read when I went through this. I went, this is pretty good. They also reaffirmed guidance, it looks like, down there. Okay, so I really like the reasoning here. Really good. By the way, let's have a look at the most recent. Do they do Appendix 4Cs? They might be exempt from doing Appendix 4Cs now. Let's go back just 1 year. October. They did release Appendix 4C in October. Were they operating cash flow positive? Let's have a look-see. They were not. So there is a potential that this quarter is a little bit different. So maybe they're going to have a lot of cash on hand. They were burning through cash down to 21.9 million, by the way. So 21.9 million. They've just mentioned here, cash was 25.3 million. So has cash increased because of their operations, or do they do a capital raising? So that could be important. So even though the company has not released a Appendix 4C, it could be pointing towards a pretty good quality results from the company, and they expect that sort of momentum to continue. Anyway, let's have a look at the chart for Mach7. Is the share price down a fair bit? And if it is, yes, it is down a fair bit. This is a weekly chart. Share price at multi-year lows. So possibly there is value when it comes to Mach7. So I do think this is a nice step in the right direction for this company. And they said all the right things as well. Okay, let's move on to company coming in number 3 with Articore Group. Pretty sure this is Redbubble. Change the name because they were doing they were not doing well. So they decided to change the name so people would forget they were Redbubble. Released a trading update today. Well, we can tell share price down 9.43%. So this is not a positive update. At least it's not the negative update we saw from Playside Studios yesterday, but it's still, share price is down. So let's have a look at this trading update from Articore. I just want to call them artichokes, but it's very close to artichokes. When I went through this, it wasn't overly, hugely bad. They talked about margin guidance, actually a little bit better than expected. Gross profit after paid acquisition margin guidance, really weird margins, that one. Gross profit after paid acquisition, maybe it's a thing. I've just never heard that before. But they do talk about a little bit of weaknesses here. somewhere. If I can, here it is. Financial year 25 guidance and outlook. We expect trading conditions to continue to be soft in our key markets. In this environment, we will remain focused on optimizing unit economics, maintaining cost discipline, and maximizing synergies across the group. Following improvements in unit economics in the second quarter for financial year 25, we now expect the group's GPAPA margin to be a little bit higher. So I thought that was a little bit positive. And operating expenditure, OPEX, to be a little bit lower as well. We continue to expect to deliver positive underlying cash flow in financial year 25. So I thought there was some interesting positive things in there. That first little part about softening or trading conditions to be soft or remaining soft could have been a little bit negative. So I thought with this, by the way, this was offset by a decline in Redbubble's NPR. So maybe that's why they changed the name, because it was more than Redbubbles. Maybe they made an acquisition and it's Redbubble and then something else, and they changed their name. Anyway, so I wasn't sure about how the market was going to react this one, and it has reacted negatively. So down 9.43%. And let's have a look at the chart for Articore. And, well, that's a weekly chart. So a lot of excitement in this company because people were buying stuff online, and they stopped buying stuff online. Share price dropped a lot. Ugly looking chart. This is an ugly looking chart. A massive down day back in February last year. Share price dropped 31% in Monday, so it must have been pretty negative results. And the share price has kept on dropping since then. So no reason to be in Articore Group right now based off the chart and this particular trading update. Now, another reason why the share price might be down is because the share price is already in downtrend and there's a lot of negative sentiment. So even the slightest negative thing in the trading update could lead the share price to be down. Anyway, so that's Articore Group. Coming in number 2, we have Credit Corp. This is another one where I wasn't sure because I read their media release, went through their results. Now, if you just have a look at the results on the surface, you might go, wow, what brilliant half year from Credit Corp. If you just look at the results on the surface, because, in fact, this was the first thing I looked at. Revenue up 45%. Thumbs up. Profit up 464%. From negative 12.1 million to positive 44 million. So if you just looked at that, you'd be running to sell your house, sell your cars, put all your money into Credit Corp because they grew their profit by 464%. But it's a little bit more than that. Now, one of the reasons why they might not have been profitable last year is because they could have had one-offs. So really what's important here is underlying profit. Maybe they made some acquisitions as well. I don't know. Revenue up a lot. That is, I suppose, impressive. So that's the next thing I wanted to see is why, if I can find it here. Here it is. Why was there a big shift in profit? So the consolidated profit or income statement will tell you. So it started off at purchase debt ledger. And if you go down the list, in the second column, PDL change in lifetime expected credit losses. Don't know what that means, but last year it was negative 65 million. This year it was 0, and that's it. That's why there was a big shift in profit because of that one line. If you keep on going down, you can see some other changes in numbers here. So a growth in consumer lending revenue, growth in finance costs. So that's increased. Employee benefits slightly increased. And a few other things have slightly increased as well. So there was a big one-off, and that's why there's a change in profit. So that's the main thing I looked at. The next thing I looked at was just their media release. What are they talking about here? So 12% growth in US collections, 5% growth in over the half in consumer lending book to 465 million, 32% growth in underlying group net profit after tax to 44.1 million. So that's the most important thing. But still, underlying profit did grow. So all this looked pretty good. But again, just because I thought it looked pretty good doesn't mean the market reacts like that. Now, when market did open, I was actually looking and following the share price movement of Credit Corp just because I was unsure. And at one point, the share price wasn't down all that much. Share price opened at 17.96, so it's down a little bit, but not a lot. And that was the high of the day. Share price has moved from 17.96 at the high of the day to a low of 15.90. So it seems like maybe the fund managers have worked the numbers, put it into their machines, their algorithms, and the algorithms has spat out a bad number. And that's why maybe the share price has sold off today for Credit Corp, because the share price has been dropping all day, and that's actually fairly negative. That means there's been a lot of selling pressure on Credit Corp today. In fact, if you have a look at the chart, you can see a really long, big, bearish one-day candlestick. When you see those really big red one-day candlesticks, those are really bearish. And if you have a look at the 1 minute chart, it's been falling all day. Yep, it's been falling all day. So that's really negative as well. Now, the next thing I should mention is I did go to Capital Brief just to see what was mentioned here, because you do get a lot of interesting stuff here. Where is it? Credit Corp. They did mention Credit Corp, by the way. Funny enough, Appen shares slide as revenue shrinks. Their first article on Appen was, Appen rises on increased revenue or something like that. Yeah, here we go. Credit Corp shares drop on earnings miss. That makes sense. I'm just going to find that Appen. There we go. Appen revenue jumps on AI growth. And then the share price actually did. So maybe some retail investors saw that and went, we should buy Appen because revenue jumps on AI growth. Sounds really exciting. And then the retail investors bought in, and then the fund managers came in on force and drove the share price down. So let's have a look at Credit Corp. So we have a couple of articles here. One released at 7:58, talking about has swung to a first half profit on the back of record consumer lending and growth in US collections. So in fact, their first article today released at 8 a.m. was quite positive, it seems like. Was quite positive. Yeah, in fact, you might be buying Credit Corp based off this, reaffirming guidance and earnings per reaffirming profit and earnings per share. And then the next article with the share price down, Credit Corp shares drop on earnings miss. So E&P analysis Olivia Collins said the result saw slightly softer collection trends than expected. Overall, the result shows a business continuing to move in the right direction, albeit perhaps at a slightly below expectations. So again, you can see what happens to the share price when results don't meet expectations. So this, on the surface, the results look okay. But here is a case where results missed expectation and the share price has dropped 12%. And stock of the day, without a doubt, is Zip. I've done a standalone video on Zip, share price at down 25.54%. If the share price doesn't rally above 250 over the next few days, I will be taking profits in my trade on Zip. Wouldn't be surprised if they do rally and rally significantly, but I need to see the market falling back in love with Zip. So wait out for that video, standalone video on Zip. Okay, let's move on to some of your questions. By the way, there was one on Wisr. Here we go. This is from Alex T. Care to cover Wisr through graphs and volumes looking very interesting over the last 2 days. Trading quarterly update scheduled for Thursday as well. Funny enough, Wisr did release a quarterly update. And I haven't spoken about this because I knew I was going to discuss this in the comment section. Share price down 11% on their update. Wisr delivers 77% increase in loan originations. I actually went through this and I thought, it sounds pretty good. Everything's growing, moving in the right direction. There was a bit of an increase in 90 plus days arrears. Maybe that's a little bit, higher than expected. I went through this and I didn't find anything to significantly dislike. But again, I don't follow this company too closely, and I went through this really quickly. So another case where I just want to see how the market reacts. Down 11%. Share price was actually up at one point today. Yeah, the high was 3.7 cents. So maybe this is a bit of noise. It could be just a bit of noise. It could also be profit taking, because the chart and the share price has risen a fair bit over the last few weeks. Wisr. That's a 1 minute chart. Let's have a look at the daily chart. Yeah, share price rallied over the last week. It's gone from about 2.5, 2.6 cents up to 3.7 cents. So wouldn't be surprised if there is a little bit of profit taking today. Maybe buy the rumor, sell the fact. I don't know. And there is a bit of resistance at around about 3.6 to 3.7 cents. In fact, the share price of this company rose significantly on the 30th of October. Share price rose all the way up to 4.8 cents, and a little bit of weakness came in on that day as well. So this is a problem when the share price has dropped a lot. You can see Wisr, not that long ago, a few years ago, was about 33 cents. So share price has dropped 90% over the last few years. Now, it does look like, just based off this sort of view, share price is now consolidating. But whenever the share price does rally, we do see a little bit of selling coming in, and we need to see that come to an end. We need to see all those holders who bought in high prices in the past to have been washed clean out of the registry. And if that happens, share price can then move higher. Maybe that's already happening. Maybe a lot of those shareholders have already sold out, and maybe the resistance now is just those shareholders who bought in the past year at higher prices. So the update didn't sound that bad. I thought it was quite good, but the share price has sold off. So a little bit, I wouldn't say confusing, but sometimes this can happen. Sats Wisr, Alex T. Okay. Scott says, why is there no JHX on the list? Because share price is doing nothing. I do think there is definitely an argument that James Hardie could be a high-quality company. And the share price, if the share price was down a lot, if the share price was, say, maybe $40, I could have had it in my list. But, yeah, I had no reason to include James Hardie. It's simple as that. I mean, I only picked 25 companies. There's how many? 2,000 companies on the ASX. So that's probably why. Heme 151 ABC, is Brainchip a good trade right now at a support level? Let's have a look at Brainchip. Story stock. First thing you have to be aware of, which means you're going to get a lot of volatility and you'll see day traders in this one. No reason to be buying this company for the long term. Story stock. Story can go anyway. It's one of those books I used to read when I was really, really young, where you choose, I forget what they call it, but you choose a scenario. So at the end of a page, you can either, pay 50 cents for a book or pay $2 for a drink. And then you have to go to a new page, depending on what you choose. And then you might die the next page, or you might win $10,000 the next page. What are those are called? Choose your direction books. And that could be true for Brainchip. It could go in many different directions, this story. This could be the biggest company on the ASX in 20 years. It could be defunct. It could have gone bankrupt. It could have been bought out. Many different directions for Brainchip moving forward. My biggest problem with Brainchip is a lot of success has already been priced in. Market cap is about 600 million, 643 million. Chart-wise, so you're not asking about the company. So there's the other thing I should mention is when you're just talking about the chart, disassociate yourself from the company. Don't think about the quality of the company, where the company is not a story stock or is a story stock, high quality company. Just look at the chart. So that's what I'm going to do right now. Let's have a look at the chart. So the original poster, Heme, just call this person Heme, says it's at support level. And I would agree with that. There is a support level. That support level is this dashed line at about 31 cents. So share price is 32. So what you could do here is you just buy some shares at 32 cents. If the share price goes below that support level, simple sell, small loss, but then you might see the share price bounce. So there is definitely a scenario here where there is a trade here. My next concern would be the last bounce was fairly weak after that really good rally in the share price back towards the end of December. And then we didn't really see the share price rally, or haven't seen the share price really rally since then. There was a small rally, but also the company released a pretty bad Appendix 4C, receipts of maybe $20,000. So that's what the share price did for a few days ago, but it fell to the support level. So this could be a trade. I don't think I would do it. I don't see much upside unless day traders get in. If day traders really get in, they could push the share price up a fair bit. Okay, so that's Brainchip. Ryan Mott says, how's Dubber looking? Let's have a look at Dubber. Bit of an update on Dubber. It's looking good. So again, this is another case where I've got to, I am biased against a company. I don't like Dubber at all. But this is a case where I've got to let my feelings aside when I'm looking at the chart. The chart is a completely different thing. And if I did not know this was Dubber's chart, I'd be saying or thinking, this chart looks pretty good. I do like this chart for Dubber. It's a really nice looking chart. That's all I'm going to say. It's a really nice looking chart. There's nothing else to say. It's really good. Share price had almost a 1 year high. It's in an uptrend. Some nice volume coming in the last few months. They might release a really good Appendix 4C. I don't think they have yet. Highly cash flow negative, by the way. So if they do release a really good Appendix 4C, maybe that's why the market is getting excited about Dubber. Cly22 says, but will you end up taking position in Sigma? Possibly. Possibly I will take a position in Sigma or Chemist Warehouse. Possibly. Not a definite at this point. EZZ, Martin Pleasant, been looking at this company for a little bit because of its margins and return on equity. Keen to hear your thoughts. I do think there is a possibility that this company is cheap at these levels. So I'm just going to have a quick look at FinChat. Have a look at the yearly data. I'll just show you what I do for every single company that I am researching. I just have a look at a very simple look at the company overview. So the first thing I look at is revenue growth, and the revenue growth for this company is pretty good. So we're talking about over 40% over the last few years. In fact, over the last 5 years and 3 years. Earnings per share growth, 39.3% over the last 3 years. So we don't have a complete history here because this is more of a recent addition to the ASX. They IPO'd. When did they IPO? When did EZZ IPO? Was it after COVID-19? I'm pretty sure it was. We can actually have a look. I'm pretty sure it was post COVID-19. It was 2021. So we don't have many years of history here for EZZ, but really good revenue growth, really good cash receipts growth. This company's profitable. They have $20 million of cash in hand, and that cash on hand is increasing. P ratio is only 13.2 based off their profit. That profit could double. It could double easily. What else? Forward P ratio is 11.8. They don't have a return on equity here. And the reason they don't have a return on equity is because it's a 5-year average. So if we go to the financial section and we have a look at some of their ratios, I would assume return on equities, we can calculate this ourselves, by the way. Where is the return on equity? Oh, we have to look at the income statement. Actually, where is their return on equity? I thought it would be in ratios. Capital efficiency, there it is. Return on equity is 38.8%. And if you have a look at the last 4 years, this is why we don't have a 5-year history here. 32.4%, 12.2%, 28%, 38.8%. So really nice return on equity. Probably the big question I have right now is why is there a sell-off in AZZ or EZZ? Why is a market selling off? Is it just noise? Is it just sentiment? And that's why I'm thinking, I think the market's overreacting, and this could be a good time to buy some cheap shares in this company. Could be, I don't know. All margins, by the way, this company has really high margins. And in fact, let's have a look. EZZ. In fact, you can see the margins again in this. So here we go, margins. So gross margins, 76.7%, operating margins, 14.6%. I really focus on gross profit margins, really high gross profit margins. So they have a lot of money to play with. Put it that way. Have a lot of money to play with, and they do spend a lot of money on marketing and advertising. And that's what can happen when you have high gross profit margins. You have the ability to be more flexible with what you do with that gross profit. And EZZ has decided over the last few years to spend money on marketing and advertising, and that's why their revenue has grown quite nicely. They have cut back a little bit, but they're still growing their revenue. Anyway, so I do have maybe not a high opinion on EZZ. I do have a nice opinion on EZZ, and I'm not sure why share price has pulled back. And thank you, Rick Thellion, Bloodbath for Zip. Playside Studios, Gussie says, buy the dip. I'll leave that for you because that's it. That's all I've got for this particular video. By the way, has there been a buy the dip scenario for Playside Studios today? Oh, share price flat. Share price as low as 19 cents. Anyway, I sort of agree with someone else who said, here we go, your Frenjamin. At the end of the announcement states that the second half of 2025 will have a few games pumped out which are expected to turn a profit. As a shareholder, I'm going to hold this one opposed to selling at a 50% loss. I actually do understand that. There is a possible scenario where everything negative has already been priced in, and there is definitely a possibility where this company becomes highly profitable within the next 5 years. They do create games, and who knows, one of these games could go viral and they could make a lot of money. I am not against the idea of actually taking a sneaky position in Playside Studios. I haven't had a close look at that, but I'm not sure what the valuation of the company is now, but there is a possibility the market has overreacted here. So even though I was really negative about the trading update, I think there is a possibility of a scenario where the market has overreacted. Okay, that's all I've got for today's video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good night. Bye.